Evening, Facebook friends. Thank you for joining us here at Navigate Home. So Tony Abadi is here with Ross Mortgage, and he is one of our newest members with Navigate Home, and we're super excited to have him today or this evening to tell us a little bit more about the mortgage world and how to navigate that, during this COVID period of time. And just as a resource, even if we're not in COVID, you can call Tony. But Navigate Home is a resource for seniors and for your loved ones. So you can go to one place. We are professionals that are all vetted out to help you navigate this treacherous waters of trying to figure out what the next step is. So today we have Tony. So Tony, tell us a little bit about yourself.
Yeah, thank you very much. Yeah, so again, I'm Tony Abate. I'm a branch manager with Ross Mortgage in downtown Rochester. Ross Mortgage is a mortgage bank that has its roots that go back to 1949. We do exclusively residential financing for folks' homes, investment property, second homes, and my job is to help folks get from point A to point B and close on their new home, be it a purchase or a refinance transaction.
That's fantastic. Well, right downtown Rochester, which is fantastic for all of us, right?
Yeah, absolutely.
So my first question, Tony, is we know that mortgage rates are really low right now. And if you have a loan on your home and you're a senior, you're 62 years or older, and you're still paying a mortgage rate, because interest rates are so low, and they're paying a much higher interest rate, would this be a good time to remortgage?
Most definitely, or at least take a look at it. Sometimes we'll have consumers say, well, I know that my interest rate should drop by 2% before I refinance. And that's a reasonable starting point, but a person needs to go deeper than that. A lot of it has to do with how long you might own the home or might be in the loan that we're talking about. Might have to do with what the goals are, too. Are we looking to reduce a payment? Are we looking to reduce a term? Do we need to access equity for maybe some other bill consolidation? So it warrants a conversation, but the timing is very good. I did some research before I came on as far as historic rates, and we all hear the advertisements that rates are at historic lows. Well, they really are. I went back to 1971, and rates have never been where they're at right now. So what we're all hearing is absolutely true.
Well, thank you for that. So what if you have totally paid off your mortgage and you need some extra income for something down the road? You were talking about goals. Would that be a good idea, or should just be safe, you don't have a mortgage payment?
Every situation is going to be unique, and that's what we need to look at. For some people, having that home paid off and not have a mortgage, that was a really important goal. And so while taking out a mortgage can be one way to address some of those financial needs, it shouldn't be the instant conclusion that's drawn that should be that's the way to go. So we look at the overall financial situation, and especially for seniors, it involves more than just the financing of the home. And so we might advise that they talk to their financial counselor. We have a very good person in the group that does reverse mortgages, which can be a good tool for the type of thing that you're talking about as well.
So some of us seniors have not had a credit score for a very long time. Maybe if we bought a car or something, how does that fall into, or how does that play into our rates?
It does, and sometimes it seems counterintuitive. We want to reach a point where we have no debt and don't need debt anymore. But the way that the financial world functions today, we should have some sort of credit profile that will assist us when the need does come along for financing, and even for things such as insurance. Oftentimes, insurance companies will need to look at their own version of a credit score. So not only is it important to have one, but as you might expect, what that credit score is will drive interest rates on the loan and can be a determining factor. If somebody has a very high score and the rate that we can offer is very attractive, then refinancing absolutely could be a good thing to do. Conversely, if the score is a little modest and the interest rate would not be as low as it might be otherwise, well, then maybe the conclusion will be a little different. With rates as low as they are, it's hard to go wrong with a refinance if you are, say, over 4% right now on a mortgage.
Okay, that's a good guideline. So if you're over 4%, definitely take a look.
It's worth a look. It's the cost of a phone call to at least see. We crunch the numbers and we say, here's where you are now, here's where you would be if you do the refinance, Does it make sense? And again, we layer that in with what is the goal that we're trying to accomplish.
Okay, that sounds really great. So credit scores also, I'm going to touch on that. I know you're probably not an expert on it, but you're more expert than I am. So are you saying if you basically have no debt, you pay off your credit card, your score can be compromised?
Well, the scores are dynamic, right? They don't remain static. They do change over time. And one of the things that can happen is if a person simply stops using credit because they don't need to have credit, then the credit score model doesn't have anything to latch onto to generate a score. And that's where we can have a problem with mortgage financing. Most lenders, us included, do have to have some score to be able to make a credit decision. The good news is that it doesn't take tons and tons of data to generate a score. And when folks are kind of on that cusp of where they're at risk of maybe not having enough data to have a score, the advice that I'll sometimes give is use your Visa card and get a load of groceries and pay it off at the end of the month. Or fill your gas tank and pay it off at the end of the month. You don't need high balances. You don't even need to carry a balance. You just need to have activity that'll keep the score intact.
Okay, that's great. That's really helpful information.
Sure.
Okay, so we are in the senior world, and it's really been difficult on many seniors. And one of the things that we're running across is just the cognitive decline, especially with isolation and everything going on with COVID. So what if a couple finds themselves running out of retirement money, one of their loved ones is very ill, and they really need to use it as a resource? And it's their biggest asset. So is that what we do, take another look at your house, or is that what you're talking about?
Well, it is worthy of a look. The one thing that we would never want to do is put somebody in a situation where we solve one problem but create another. And what I mean by that is if somebody does seek out a mortgage so that they do have maybe a little extra cushion for cash, or they need it for medical bills or whatever, the mortgage payments are going to start. And the last thing we would want to do is have somebody in a situation where they're at risk of losing their home because the mortgage can't be maintained. So it's an overall look. It's yes, the equity can solve a problem, but can the debt be managed as well? And that's equally important. If somebody's in a situation where the debt load is such that it's difficult to make the payment, that really creates a great deal of stress. And so while looking at the equity to solve these financial problems is one tool in the toolbox, we really need to look at everything. And that involves a conversation with maybe other family members, their tax consultant, their financial consultant, so we can put all the options on the table.
Well, I love that 360 approach. So you're really looking at the whole vision of what their goal is and if they really can afford it.
Right.
So, well, I really appreciate that. Let's switch gears a little bit. So, is there lending fees when you're doing these different mortgages?
Yeah, there is. There are closing costs involved with getting a mortgage, and the thing to know is that you have some choices, and you never want to look at just one aspect of the financing. You will have some lenders that advertise an ultra-low interest rate, but in context with that, you have fees that are very, very high. And then you have other lenders that might advertise no-cost financing that's available, so the fees go away, but then the interest rate is higher. So neither one of those is necessarily a terrible set of circumstances, but a person needs to know. So there's a lot of moving parts to getting a mortgage. It involves title searches, it involves appraisals. And so yes, a standard mortgage, you could have loan closing costs, $2,000-3,000.
Okay.
Yeah.
So that makes perfect sense. So if I do refinance, you just said I have to go through the appraisal process, and would my taxes go up then?
No. One thing that does not happen is, when there's a refinance, one thing that does not happen is that there's no conveyance. The owner at the beginning of the transaction is the same owner at the end of the transaction. So there's nothing to report to the assessor's office with regard to that. Appraised value comes into play with regard to what all of our taxes are, but the assessor's office doesn't garner that information from an appraisal done for a refinance. Sometimes we can do a refinance and appraisal is not needed. That's determined at the time of application. Save some money, save some time. So that's something that comes into play as well. But no impact on the taxes.
Okay. Well, thank you for the information. That's helpful. Do you handle underwriting in-house?
So with Ross, yes. So with Ross Mortgage being a mortgage banker, we shepherd that loan from start to finish, from the point of origination where we take the application right up until the loan is closed. And so we do make the credit decision, we process the loan, we fund the loan at the end. So it's so folks are stuck with us until the end,
well,
which is a good thing.
Yeah, that is a good thing.
Yeah.
So what is the average processing time? I know COVID has slowed several things down. Is that the same thing in the mortgage world?
Well, it sure did. We've since been able to recover from that, and we're moving quite quickly right now. We're averaging about 3 weeks from start to finish on a mortgage process. It's not a lengthy process. Once the loan does get into underwriting, it's maybe a day or two for that credit decision to be made. So that extra time, it's really for the other underpinnings that need to happen, getting the appraisal completed, getting the title search done. But you're right. During COVID, when we combine COVID with very low interest rates at that point in time, and turn times were extreme. We were seeing 60 and 90 days. Businesses were just kind of getting into that flow of working from home, technology being used at home. We need to be able to do that, but still have the same safeguards in place for people's information and so on. So couple that with high volume, and the turn times were high, but they're back to normal at this point.
Okay.
Yeah.
Well, give us an idea of what the interest rates are today.
Sure. So, of course, interest rates are going to vary for everyone's unique situation, equity, loan size, and what have you. But if we just take maybe a typical scenario where somebody has maybe $150,000 or $200,000 loan balance, and they've got maybe 20% equity or so, and they want to seek financing, 30-year rates are in the high 2% range, maybe 3% depending on the scenario. 15-year rates are in the mid 2% range or even lower. So again, the phrase "historic lows" is not that's not advertising buzz. That is statistically accurate. We are at historic lows for sure.
So we're making history, one way or the other.
History for sure. Yeah. Mm-hmm.
So I think we've asked, some of the basic questions, and really appreciate your knowledge on that. Is there anything that you'd like to share with us that we didn't cover tonight?
Well, yeah, and again, it's more than just seeking out a new mortgage for a customer. It's the whole package. And you had mentioned the impact of COVID before. One of the things that came out of the pandemic, which we're almost a year into it now, right, is the CARES Act. And the CARES Act provided folks with a variety of things, but one of the things as it relates to my side of the business is loan forbearance. So if somebody was financially impacted by the pandemic and they were at risk of not being able to make their house payment, the CARES Act made it so that a person can request a forbearance from their lender. The parameters are pretty generous. The request is initially 180 days, and you can ask for an extension for another 180 days. There is no obligation of proof of financial burden. You basically make the request, but there's a couple of important things. Number one, even though forbearance has been a buzzword and it's been out there in the news and on social media, it's not automatic. So a person does need to request that forbearance from their loan servicer where they're making their payments. Number two, forbearance is not forgiveness of the mortgage loan. So the best way to look at it is that it's a pause. You have a period of time where you don't have to make the payments, but the interest continues to accrue and the payments have to be made up. What a lender can't do is, and this is for government-backed mortgages, conventional loans with Fannie Mae and Freddie Mac, FHA, VA, and rural development loans, they can't require a lump sum right at the end of that forbearance period. So usually it's either added on to the end of the loan or spread out over the life of the loan with maybe a little bit higher payment. But that's the important thing to know, is that it's not a forgiveness of the debt. It's a pause in the debt, and those payments have to be made up. The other thing to know is that the fact that there's no burden of proof with the forbearance kind of creates a different problem, and there were folks that maybe were requesting it when the need wasn't really there. If somebody is in forbearance, we can't do a refinance for that individual, so that loan has to be brought current, and then we can look at the refinance. But it's a very important tool. The overall goal being is that nobody wants to be in a position where they're at risk of losing their home because of financial stresses brought on by the pandemic.
Well, that makes sense. So if you're really struggling with work, if you have that type of work, like just say in the restaurant industry, we just opened up February 1st or 3rd, whatever, I guess it was the
Something like
1st.
that, yeah.
So that makes sense to just give them a little bit of help.
Right.
And then it sounds like it just extends the mortgage. The interest rates still, keep piling up, but it's a good relief for that period of time.
Right, right. The aid that's come about, it's not perfect, and it had to happen quickly. But again, if somebody is at risk of losing their home, or if it looks like it's going to be difficult for them to make their house payment, so important to reach out to the servicer. It's not hard to get the forbearance put into place, but you need to take those steps. You don't want to just stop making the payments, because then the lender can start other collection efforts, and that could put you at risk as well. So evaluate it. If you can make the payments, a person should. But if you need that assistance, it's there. It does not negatively affect your credit. That's an important thing too. And then you can use that to buy some time until hopefully we get back to a little bit more normal times.
Yes, we're all hoping for that. We were hoping for 2021. We'll see.
We'll see, exactly. Mm-hmm.
So thank you so much for joining us. My name, I forgot to introduce myself. I'm Kim Russell. I'm one of the co-owners of Navigate Home with Valerie McBain. I am actually a senior placement specialist. My heart goes out to seniors. My mom, Mary Miller, was the founding director of OPC, so I've been working with seniors my entire life.
Great.
And so I love them, and I really feel like we really want to lock arms with them and walk them through the process. We don't know what we don't know.
Right.
And there's just so many things to try to figure out. What do you do with mortgage questions? What do you do if you want to sell your house? There's so many things out there, Medicaid, Medicare. What do you do when you need to repair your home? What if you need someone to come in to help with a wheelchair ramp? Finances. What's the difference between palliative care and hospice care? Tony and I were just talking about that on a personal level. So this is what Navigate Home does for you, is it gives you a place where if you have a question, like what's a power of attorney? What's the difference between the care power of attorney and financial? Is that the same, or is it two different documents? We have a library of videos here on Navigate Home that you can just go and plug into and listen to one of the experts share their expertise, because we can't be an expertise at everything. So this is just to help you be educated and to help our loved ones. And so, Tony, I just want to say thank you so much for this evening.
It was my honor. This is a wonderful mission. I feel honored to be a part of it. So thank you.
Oh, you're welcome.
Yeah.
All right, guys, have a great night.
Good night.
Okay.